It's an event, it will have some effect, but it doesn't seem very likely, we can never be sure, it's an early stage, but it doesn't seem very likely this will be a huge economic event, unless it really is a much bigger shock than we now expect. I would expect things to return to normal pretty well, and if this is the case, then you lose enough GDP maybe to get growth down by a percentage point over the year. That doesn't seem to me a disaster, or indeed even very important. The equity markets won't be much affected if they assume this is just a blip in the world economy. Equity markets are valuing the profits of companies over a very long period. So unless there's some untoward effect we can't imagine, I think equity markets have no reason to change very much, and that's what we're seeing. It's a mildly deflationary shock, very mildly, I think, will lower prices somewhat. That would tend to strengthen bonds, lower yields a little. Again, it won't be as powerful as other things that might be, and it's going to be temporary. Commodity markets will inevitably be down a bit because Chinese consumption is such a huge part of global commodity consumption, and they're relatively short term. They're very, very influenced by immediate demand, and the same applies to the oil market.